Hello, hello, hello. Welcome to my channel, Win with Will. Today is Wednesday, July 23rd, and we're going to take a deeper dive into my funds. We're going to be talking about why did I select the funds that I'm investing with, and some of the thoughts behind why I went with those and how I kind of the information I look at on how I pick and choose. For me personally, the reason that I went with the funds that I went with was more so for looking for higher dividend returns. I know that it's always good to have a good to have the price of the fund to increase as well as generate dividends. But again, for me and my strategy, my number one goal was more so looking at the actual dividend payouts and then considering the increases in the fund as extra. If it can go up, I'd love it. But if it stays even, that's perfectly fine with me as long as it's still kicking out a good dividend. So that's pretty much the number one focus of the strategy that I was using as I was picking my funds. But let's get into some of the information here. And a quick disclaimer, just remember, I'm not a financial advice. I really appreciate everybody that's been following along on my channel, but this content is for entertainment and educational purposes. So remember, do your own due diligence. I'm just sharing the information and the results that I'm having and the strategies that I'm using. But do your due diligence, and just remember that this is not financial advice. And I'm just going to go right into showing this was my last week's results for the various funds that I'm in. And again, I'll talk about why I ended up getting rid of YMAG and YMAX, but currently the TSYY Tesla Fund, XBTY Bitcoin Fund, NVYY Nvidia Fund. These are all with GraniteShares, which is the company that kicks out these various high yield income strategy funds. And then these are from YieldMax, ULTY, very popular fund, and MSTY, which is also a very popular fund. MSTY follows a company that trades under MSTR, which this is a high Bitcoin holding company. So typically, as Bitcoin goes up and down, this company goes up and down as well. ULTY, they invest in various stocks, and they do what's called a cover call strategy. To their number one goal is just to produce a consistent income. And so I'll get into a little bit of details on each one of these, but a key thing that I have here on my sheet is this right here: dividend earnings percentage based on the price. And so this is probably one of the main things that I was looking at when I was choosing to go with the various funds that I went with. And the way I would come up with this number, this percentage, would be I would take the price of the fund. So when I first bought this fund, it was about $10.35, or that's about the average based off me reinvesting and buying more. But at the time that I clipped this, it was trading at $9.64 a share. And the most recent dividend payout was 25 cents per share. And so what I would do is I would take the dividend amount divided by the price of the fund, and I would come up with this number. And this percentage number is basically giving me an idea of, based off the price of the fund and based off the amount of the dividend payout, this is the percentage amount that the dividend is paying out compared to the price of the fund. And so a really good rule of thumb, if you guys are kind of considering which funds you want to get involved in and things like that, is and the other thing to also keep in mind, I'll preface this by saying that these numbers are always changing, right? So as the price of the fund goes up and down, usually what you'll see is the price of the dividend payout will a lot of times go up and down as well. But I'll talk a little bit more about why I went with some of the ones that I went with, like for example Tesla, which is a really high volatility fund. It goes up and down and up and down. It has a lot of swings, but a lot of these funds, after they've been out for a little while, usually what you'll see is that the price will kind of start going down, 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 down. And so where you get involved makes a big difference, because you don't want to take a big, huge loss on the price of the fund going way, way down on you. Because even if you're getting some decent payouts, the payouts have to be really, really good to offset the value that you're losing out of the money that you've invested with the fund. So that's one of my key strategies, is that oftentimes I'll try to get in after the price has already taken a major dip, so that it's like I'm able to buy at either kind of a discount or at the low point for the fund, in which case it's like, hey, if it's been hovering around this amount for the last few months, coming down from say 20 something dollars down to 10, then I felt like the 10 is a good spot for me to get in, because it'll probably hover in this area or potentially go back up slightly. But keep in mind this number, the 2.59%. And again, this is not updated as of today. This was updated as of Friday. But I look at it in terms of, for my scenario, where I'm not starting out with a ton of money. So I look at it like, okay, if I had $1,000 to put into this fund, if it was kicking me out 2.59%, basically for $100, that would get me $2.59. For $1,000, that would get me $25.90. So $25 from $1,000, this would be pretty much beating all of the other programs, which is a big reason why I have the most funds in here. But also, when I initially bought this, again, this fund started going down, down, down. So I would purchase more and more shares at the lower amounts, which brought my average cost down some. So all of that factors into my decision making. So just wanted to kind of get that out there. And again, everybody has their own agenda or their own priorities of what's most important to them. So for some people, the actual price of the fund increasing is going to be more important than how much the payout is, right? I mean, that's really the foundation of investing. You don't want to invest in assets that are going to go down and lose value, because your overall portfolio value will decrease. Some people, like myself, I'm not as focused as much on the price of the fund. But again, I'm not looking for it to go down, because again, if it goes down too much, typically you'll see that the payouts will go down too. So a long way to get around to, a big factor for me is looking at these numbers on each of the funds and then kind of making my decision from there, especially because I'm starting out with a smaller amount. So I feel like I would like my dollars to stretch as best as I can. So if I had more money, I could potentially, get into higher dollar stocks and funds that would be quote unquote considered more safe and more long-term investments that people, that are really solid, that's been around for the test of time. All of these are still fairly new. So there's a lot of risk involved with getting involved with these various funds, because these haven't stood the test of time. We don't know if it's going to continue to pay out as well as it's been doing. So it's a lot of uncertainty. But for me personally, the risk is worth it for me, based off of what I'm looking to do, right? If I'm trying to just generate as much dividend income as fast as possible, I'm willing to take the risk of, if these don't last, for the next 20 years, maybe I'll have to end up, moving funds to this place or that place. But for right now, I'm really liking, the results that I'm having, and I'm liking, how these are paying out at this time. But again, so let's just take a quick look at each one of these. So this will be about $25 a week off of $1,000, almost $26. This one, the Bitcoin fund, 193. So if that was $1,000, that'll be $19.30. So about $19 a week. $19 a week for the Nvidia. I got rid of these, $8.50 a week off $1,000. $9.40 a week off $1,000. Again, keep in mind, I'm just giving off of the last week that I had it, but these amounts do fluctuate, so this percentage will change, but it's been roughly about this amount for these two, which is why I got rid of them, especially because one of these had a really, really low dip one week where it dropped down and only paid out $1.20. So I was already on the fence with YMAG and YMAX, but they are really long. These have been running longer than some of the other programs, so I felt it was a safer play. But overall, for me, I just felt like I felt better just putting more money into ULTY. So I sold these out and dumped all the money that I had from these into ULTY. And even though ULTY is not paying as much as these other ones, I still like it because it's been very consistent. The price of the fund has been hovering, right around this $6 to somewhere in the $6 range, and the dividend payout has been hovering right around the 10 cent. So even though the 156, which would be only $15.60 off $1,000 for the week, is less than these others, but I feel that this is a steady Eddie, right? It's steady. For these two, I got involved with these because they were paying out really high dividend amounts compared to the price. But these are some of the newer funds. So these have only been around a good, 6 weeks or so. So there's still that, in my mind, I know these still potentially have that opportunity for the price where it's fluctuating about $24, $25, $26, $27. I know that these still have that potential, just like a lot of these funds do, after they have been around for a little bit, to go on a decline. So I wanted to kind of ease into these a little bit more, even though they were paying out better. I did just actually this week purchase more shares of the Nvidia fund, but again, I'm a little more cautious with these just because they have not already endured the price decrease like some of these other ones have. So that's why I'm loading up more on ULTY, because I feel like this one is very steady, very steady. And again, even though it's not paying out quite as much, I'd like the steadiness of it, and I like the idea that with it, when I first started, this was one of the ones that was the most attractive to me because it was such a low amount, with being a little bit over $6. Again, with me starting out with not a huge amount of money, I was able to buy a lot of shares. So I was able to start off with 200 shares of this, just because the price was really it was really attractive. Same thing with the Tesla. I started out with 205 shares right off the bat because it was $10 and this one was $6. So again, I felt like I could stretch my dollars a lot further and be able to get a little more bang for my buck versus some of the other funds that may be doing very well but have a higher price point, which will allow me to not get as many shares, which means even though they may have a higher payout per share, but the fact that I have so few shares, I will still not be doing as well as I'm doing with these. And then I did end up going with MSTY. it was my first time jumping into a monthly pair because MSTY is very popular, has a huge following, and I've seen a lot of people, posting videos and showing their results with MSTY, and the payouts on this were huge for a while. This one is one of the lower ones that it's had for a while, so we'll see if it starts bouncing back or staying in this range. I'm holding off on if I'm going to buy any more of MSTY. There's another monthly pair with YieldMax that I'm looking at that I'll show you guys in a second. But based off this same figure, right, $1.24 per share was the last payout at $22.07 per share. That's given 5.62%, which off of $1,000 is $56. But again, this is monthly, so not weekly like the others. So $56 a week. But if you look at this one, $26 a week. So if you do that in a month, that's $100 compared to this one only giving you $56 in a month. So even though MSTY is really popular and has a ton of backing and a ton of funds under management, some of the others are outperforming it. And again, another big reason that I went with more weekly funds to start out is because my strategy is to compound. So I want to take my earnings and compound them back to buy more shares. I'm not taking the earnings and pulling them out. So I felt as though if I can compound 4 times versus 1, it gives you the ability to have the snowball effect work a little faster for you, even if it's just a small percentage. If I got $100 in 1 month and put that back into an account, at the end of the month, I've got an extra $100 in there. But if I'm getting $25 a week and I'm putting that back into the account each week, at the end of the month, that's going to be more than $100 because the $25 each week is earning a little bit extra. So it's not a lot of difference between 4 weeks and the 1 week, but when you think about factoring time into it, $25 a week compounding versus $100 a month, over time it will add up to a nice difference. So that was my strategy and my thinking behind really being interested in the weekly pairs versus the monthly. It just gives me the ability to compound more and feel like I can build up a little bit faster on my interest that I'm earning as I'm compounding more and more, the compounding interest effect. So let me just show you guys a couple of things here with some of these funds with the charts and show you why I went with some of the ones that I went with. So for example, and showing you how the pricing of the actual fund has gone. So with this one here, MSTY, and this is today. So today, $21.15 for MSTY. If you look at it over the last year, it's had some really high spikes up, tumbled back down, and it's been hovering kind of in this little range here. So I felt for me, if it can stay, kind of consistently around this, in this range, and if it still pays out a good amount as it had been, or if it gets back to those payouts that it has been giving, then this would be a really good fund for me. So this site here, Market Chameleon, is a good site that you can go on if you want to track the dividends on these various funds. So you key in MSTY, it'll show you when the next one is coming out, July 31st, and then it'll show you the history. So this most recent payout for MSTY, it paid out on July 7th, $1.23. But if you look here, 147, 237, 133, 133, 202, 202, $3, $4, $4. So there was some times that MSTY has been really paying out some huge amounts. So even people that have been on the roller coaster ride with it revving up really high and coming back down. They've the dividend amounts were really making MSTY like a rock star for the people. Because again, if you check YouTube, you'll see so many people making videos about MSTY, and this kind of gives an idea of the prior 12 months percentage, 124% if you average out the last 12 months of payouts. So that's why I jumped in MSTY. I felt like even though when I got in, it had took a little bit of a dip. Hopefully it'll start, creeping back up to some of these bigger amounts. If not, I'll probably likely move to a different monthly pair, which is this one, SMCY. This one is with YieldMax as well. And I like SMCY. There we go. I like SMCY because it's in the tech space with with all the AI and data sharing and holding and storage and things like that. So it follows a stock SMCI, which is, again, it's in the tech space. And just right now with technology booming in the future and all of these things, I just feel like that's a good space to be in. But if you look at the price, $20.84. Next, this was on the same schedule as MSTY, but right around the same price as MSTY, MSTY 21, this one 20. But this one has been paying out some really, really nice dividends. So if we were to grab my little calculator here and do the same calculation. So the last payout, $1.61 divided by the price, $20.84. All right, come up with 7.7%. So off of $1,000, MSTY was about 50 something, 56. This would have been about $77. So monthly pair, if I were to add another one, this was the next one that's on my list, SMCY from YieldMax. So we'll be keeping an eye on this one. I may throw some in before the next payout on the 31st of July. Again, it's on the same schedule as MSTY, so instead of putting more shares into MSTY before the next payout, I'll likely put some into here and then let those two monthly ones kind of duke it out to see which ones I'm going to stick with long term. And then looking at the chart here, SMCY. And we look at the 1 year. See, it's down 59%. And it's loading up slowly. Let's see if I can get this to come up. All right, there we go. So the 1 year chart on SMCY, see, way up here, $50, $60. Down, 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 down. It's already taken the big hit and loss on the price. So if I were to get in here at the $20 range, it's kind of already at the lower amount that it's already hit its bottom, right? So at this point, it likely could hover around here and I'll be fine. But even better if it starts to creep back up to where it used to be. But again, a lot of this has been my strategy to jump in after the fund has already taken the major drops in pricing. So now I can just kind of bounce around where it's at and, just look to pick up the dividends. So NVYY. All right, and again, this one is new. only started out in May, but this one is up. So again, this one and the XBTY, they have not taken the loss that that I get concerned with some of these funds. So again, I'll keep my eye on this one. Hopefully it'll stay consistent on its pricing. But again, I know a lot of these will have that loss after they've been around for a little bit, like some of the others. So let's take a look at XBTY. And you'll see the same thing. You'll see the same thing with this one. $25.65. Been hovering around this same price. Got up to almost $27, but it's been kind of hovering in this little space. So we'll see if it sticks to where it's at. Let's take a look at ULTY. All right, and we'll do the 1 year on ULTY. And ULTY started out as a monthly pair, and it was taking a big loss, big loss, big loss, big loss. They switched up to being a weekly pair, and after the switch to the weekly pair, it's been pretty much hovering around this same amount. Again, this is why I like ULTY. It's because it's been very consistent and stand in its price range, which is perfectly fine with me as long as it's paying out a solid dividend amount. If it does continue to go back up, hey, that's even better. But again, as long as it stays steady, that's perfectly fine with me. And then let's look at the Tesla TSYY. All right, same thing. You see with the Tesla fund back here in December or so when it started out, really nice and high in the $25 range. And again, this is still a little bit of my concern with the Nvidia and the XBTY, the Bitcoin funds, is that a lot of these will do this. They'll be pretty nice and steady for a little while, and then as they're paying out, they start dipping. But again, for me, when I got involved, it was around in the $10 some odd range, and it's been hovering around here, even with the Tesla stock, taking some big dips. It's been hovering around the $9 something to $10 range, and I've been buying more and more, catching it at the $9 in the $9 almost every week. Pretty much every week that I've been investing. So it's been about a good 4 weeks for me now, and pretty much every week I've bought more and more of the TSYY fund. So hopefully this can shed a little light for some of you guys that are just thinking about, like, why did I pick these? I feel like you don't necessarily want to be taking the roller coaster ride down, because again, even if the funds are paying out pretty well, your overall portfolio value will be taking a big hit, right? 61% down for people that have been involved with this from the very beginning. So even though you're getting some decent dividends, you likely still will be below water or upside down on your account, even with the dividends, because it took such a massive drop. So again, I know I was rolling the dice a little bit with the NVYY and the XBTY funds because they haven't taken the dip. But again, they were paying out so well that I felt it was worth a chance. So we'll see how they continue to go. But other than that, yeah, I just wanted to let you guys take a look at what may be coming next for me and shedding a little light, into why I went with some of the funds that I went with. So if you enjoy this content, guys, I would really appreciate it so much if you were to like, subscribe to the channel. You can comment. I've had a few people that reached out to me just kind of saying how they appreciate, seeing someone that's able to start from the small amount versus, all of the places that you see with the YouTubers. It's like, everybody's got six-figure accounts showing how they're doing and how they're making, $10,000 this week and things like that. But the average everyday person is not necessarily able to, you know, see themselves doing that. But if you can see yourself making an extra $500 a month, I mean, that's a really great start for somebody that's, really just looking to get things going. So my first goal is to build this up to $1,000. In my first 4 weeks, I've gotten myself up to over $500 for the first 4 weeks, and I've been adding to and reinvesting, adding to reinvesting. So this is going to be a gradual process. So I really appreciate you guys sticking with me for the journey. But again, like, subscribe, share, comment. And I always like to leave you on a positive note. And so we'll go with this one here. The trouble with not having a goal is that you can spend your life running up and down the field and never score. Bill Copeland. And that's why I always, when I do my weekly videos, I always share my goals, which is my first goal is to just generate $1,000 a month from my dividends. But if you don't have something that you're shooting for, then how do you ever know, when you've made it, right? So, and you never, for me personally, I never want to just set just one goal. I always want to set a goal that's going to really push me and make me stretch and get outside of my normal comfort zone. Jumping on here, starting up a YouTube channel, definitely not something that I would have saw myself doing. But I know for a fact that there are people out here like me that really appreciate, being able to have someone to take the journey with, have someone to cheer you on. So again, as you guys, comment, reach out to me, we can definitely root each other on. We can share, our results and things that are happening for us, and we can be on the journey together. So I really appreciate your time today, guys. You have a good rest of your day, and I'll be back on Saturday with my week 5 results. All right. Talk to you guys later.